Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for 𝗧𝗴𝗀𝗲. Today is Wednesday. It is the 13th of October. Don't ask me where the last 2 weeks have gone. I have no idea. Time just runs away from me. I guess I'm having too much time doing videos for you guys. Well, today is Wednesday, and I'm going to give you a full update. But remember what Wednesday is. I'm going to give you one long and one short actionable trade idea. So don't go anywhere. Stay till the end. I want to make sure you get my full analysis. So the market's not going to open up for another 2 hours and 15 minutes or so. We're looking okay. I mean, kind of random, nothing really to report. I mean, the Nasdaq is up quite a bit, but the Dow futures are up 29. And remember what I always tell you, anything below 75 up or down is just a random open, not a lot of overnight data. In terms of data today, we've got some pretty important data, so you've got to keep your eye on the bond market, which I'll go back to the data. The bond market is already at right here at the 200-day line, and I'm expecting a rally from the bond market over the next few days because I think stocks and bonds are going to go higher. I think this is a little overdone to the downside. This was done when the Fed announced they're going to do 3 rate hikes, but they always overshoot themselves. So keep your eye on the bond market, especially in light of the fact, and the bond market is up about almost half a handle overnight, and it was up about 1.71%. So it's running a little hot right now. We're long bonds right now. We've been long bonds since down here. We've been riding this kind of all the way through. So CPI, Consumers Price Index today, it's going to give us a really good idea or an understanding of how inflationary pressure is impacting the consumer. We're looking for an increase, an uptick of 0.3%. It would be really interesting to see if we're going higher or not. And a year over year, we're looking at 5.3. Ex food and energy, 0.2. It'd be great to see a lower number, right? It would be really, really good to see a lower number. But these are the expectations. The biggest takeaway here is year over year, 5.3%. On a monthly basis, 0.3%. Last time, consumer prices didn't increase all that much, so that was very positive. And then tomorrow, we'll get the number on the PPI, the Producers Price Index. So we're going to get a really good understanding of where the inflationary pressure is right now. All right. And also, we have FOMC minutes. Not expecting too much here. The Fed's probably going to make statements how they're going to take action if the economy keeps moving in the right direction, and how they're going to make 3 rate hikes starting next year. That's what I'm guessing. Again, the bond market is very, very, very sensitive, a lot more than the stock market, to this information. So either keep your eye on the bond futures, which would be under financials right here, or just type in ticker TLT, and it'll give you the full picture. It trades almost 24 hours a day, just like any other stock. But this is an ETF that I track that trades the bond market perfectly. So put the call ratio. Looks like it bottomed out again. It looks like the market, I'm gonna tell you what this means right here, and this is not usual. This is telling us anything in this window here is random. Anything here is overbought. Anything here is oversold. And it just looks like the market keeps coming back to oversold territory. And I'm going to tell you guys something. The reason for that is, it's a really, really good reason for that. I know a lot of you guys are sick of me looking and talking about it, but I'm going to tell you what it is. And I'll use the Nasdaq 100 because it illustrates the point very, very well. Here is why. Here's why. Because we went all the way down here, and now we're coming back up, and the market can't go down anymore. That rubber band is stretched out all the way. So now when we're getting downside pressure, it's kind of like just before it was kind of a little overstretched to the long side. Now we're overstretched to the downside. So again, if we were up here, I would be really, I mean, if the stock market, let me just show you a chart here with it. This is the actual underlying asset that we're looking at right now, the momentum level. So again, if we were coming off of here and momentum levels were where we're at, I would be really worried. But momentum, we're already almost at the 200-day moving average. And again, momentum levels look like they bottomed out. And I've showed you this before. This is going back 15, 16 years. We've been below this level 1, 2, 3, 4, 5, 6 times on the Nasdaq 100. So the fact that the put to call ratio is keeps telling us we are over we are oversold. We are oversold. And I mean, look at this number. We haven't been here. This is 10 years. Look at this. 1, 2. How many times have we gone above here? Probably can count that too, right? As a matter of fact, let's draw a line. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times. 12 times in 10 years. In 20 years, oh, this is 15 years. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 times in 15 years. This is 2016, so 15 years. So it doesn't happen very often that we go to these levels. So the market seems to have bottomed out. And I don't know any other way of saying it. The put to call ratio is all the way up here. I mean, look at this thing, 120. The momentum levels are down here. It looks like the market is set to go higher or congest near the current levels. And again, if you look at volatility, we're below 20. There's no major fear levels here. If you look at the Russell 2000, the small caps, and a lot of investors are rotating to smaller stocks because they're less interest rate sensitive. Remember that. We're already above the 50-day moving average. I know it's not much because the 200-day and the 50-day are like right next to each other, but it's better than a sharp stick in the eye. And I'm going to show you something else. The Russell 2000 over the last year, 35% return. Look how stagnant it's been. I mean, let me show you this. And it's still giving us 35% because of this right here, because of that little rally. So I think small caps are going to start going a little higher, or at least show more resilience. And let me go one step further, and I'll go a little deeper for you, just to prove it to you. Look at momentum levels. Look at the number of stocks in the small caps trading above the 50-day line, 54%. Look at the S&P 500, 37%. So small caps are holding on better. That's because they have less inflationary threat. Now, I want to show you guys, I have two stocks that I'm really liking right now. First of all, in terms of, I forgot to tell you the news, big news. China reports export jumped 28%. This is the big overnight news. I didn't want to go through the whole thing with you. I just wanted to go through the narrow picture. Export jumped 28% in September. Imports up nearly 18%. Now, do I believe China? Big grain of salt, but the numbers are starting to look better. So it looks like they're dealing better with their supply chain issues. Remember, we import tons of stuff from China. China is the biggest exporter for U.S. by far. So, supply chains are looking better. COVID's looking better. This is very positive, and I think this is it's gonna benefit the stock market. But again, keep your eye on the CPI today and the FOMC. If consumer prices are running too hot, it's actually bullish for the bond market, because then the Fed can say, well, we're putting too much money into the market. Inflation's running too hot. We need to stop. But if consumer price index is low, that could be a reason to raise interest rates. Now, before I move on to my favorite long and short stock, I wanted to show you the 11 sectors and just show you where they're at right now. Energy, financial, consumer discretionary. These are the ones you want to be long right now. Preferably financial and consumer discretionary. Energy looks like it ran away a little too much. We may want to wait for a pullback. In terms of defensive, in terms of stocks to sell, I would stay away from basic materials and industrial. I would stick with utilities and consumer staples for now. That's what I would be doing right now. Now, I promised you guys two stock, a long stock and a short stock, actionable trade ideas. So this is one of my favorite stocks, AAWW, and also, just so you know, I got you covered. It's in the Russell 2000. It's a small cap. It only has a market cap of $2 billion. So if you look at this chart, they do freight shipping. Freight, remember bottlenecks, freight shipping? Where do you want to be when there's supply chain bottlenecks? Freight shippers, because they're going to make extra money. They're in demand right now. Pulling back from an all-time high just 5 days ago. If we hit this 50-day moving average right around the 75-ish level, even if we go a little bit below, I like the 75 level. And if we look at the options, I would go to 121 expiration, and I would go to the 80 strike price right here. So we're looking at 121 expiration. We're looking at 80 strike price. You may have to rewatch this video. Just press the rewind button. And I would be liquidating the option I'd be buying the option right around the 75 level. If it drops to the 72-ish level, I would get out, and I would ride it all the way up to the 88, 90 level. And you have plenty of time with that option. It's a January option. So that's Atlas Airways. That's my long trade. Now, in terms of my short trade, I've got a short trade for you as well. Let me show you. It is right. Let me just get my stock fetcher code, get everything set up here. There it is, PLL. Let me just show you here. It's a lithium company. Lithium isn't doing all that great right now. The stock is up, but as you can see here, it's been going lower and lower and lower. And this stock peaked out back in March of this year. It's the 200-day is now above the 50-day moving average. That's a bearish sign. We're now pulling back from a low right here, all the way to above the 50-day moving average to the 200-day line. I would be buying a put right around here, and if it violates this line, if we go to the, say, 65 level, I would dump it, and I would take profit right around the 49 level. The beautiful part is, if we break this 49 level, the next area of support is all the way down to the 27 level. So this put can give us some real good upside. Now let me give you the strike price and expiration. And again, you may have to watch this video. I'm giving you a lot of goodies today. So we would go to the 12/17 expiration. We would look at the puts, obviously. The price is at 50, almost at 58. We would be looking at the 60 or the 55 put, one or the other. And again, just to give you, this is December 17th expiration. We would be selling it right around the current level. Selling short the stock or buying the put near the current level. I don't differentiate between long and short. For me, it makes no difference to go long or short, so I'm completely neutral. So sometimes you'll hear me saying sell or buy. So you're buying a put because you want it to go down, but you're selling the stock. So I would be selling it right around the 57 level, covering it around the 65 level, taking profit at 49, maybe a partial profit, and seeing if we can break. If we can break this level, we can go quite a bit down. That's my two trades for today. PLL for the short side and AAWW for the long side. Now, before I let you go, I've got something important, timely, something you need to pay attention to. Now, some people have never ever heard about the secondary market, but it's a completely overlooked part of the options market that most traders and investors don't understand or even know exists. Tom Busby, T-Buzz, he's widely considered one of the top traders and researchers in the industry. And after trading these moonshot trades in his own account, he's finally decided to share the strategy with anyone who wants to step up their game, improve their game. Tom has nearly four decades of trading experience with consistent track record in all types of market conditions. So traders will want to have a strategy as we near the end of the year. Remember, it works in different types of markets, and you don't need a lot of money to start trading this strategy. Click the link below to see how you can get access to Moonshot Trading Club and learn more about this little-known secret. And make sure to like this video, subscribe to this channel if you're watching on YouTube, and stay ahead of the market by being the first to be notified when I post my next video. And don't miss out tomorrow's video where I'll give you a top ETF and an option pick to go with it above and beyond my morning analysis. You guys have a beautiful Wednesday hump day. Bye.